The lending stats out from the Reserve Bank is painting an interesting picture for investors, Bev. Feels like there's a little bit of an awakening in the market.
And I think it's the interest rates, psychology-wise, it's under the 6% mark, and often people just say, it's only 5.5% to just under 6. So even long terms and short term rates
looking good. So
looking good, yeah.
If you look around, say 2020, 2021, there was a time when this green line is investors borrowing, right? And that used to be outweigh first home buyers. Now, 2022 onwards, the investors really dropped out of the market. In fact, so much so that first home buyers were consistently borrowing more than them, right?
So mind you, back in 2022, the banks have also, reserve banks have also removed the restrictions on the LVR proportion. So
there was a lot of changes up and down on that.
Yeah. So that was
but it still made it. It did make it still difficult for first home buyers even in the last year. But in saying that, what we've noticed just now, see that there, is investors
coming back.
Have come back into the fold, and it's like you said, it's probably the interest rates really. Overall, if we look at lending, right, one thing you can notice is this big. We're not returning. It's still pretty flat. It's not going crazy yet.
Yeah.
Right.
Yeah. So definitely, there's a big gap in the lending growth. But again, the banks have dropped their
test
rates and triple CFA.
Triple CFA. Now, that's an interesting point because with that, bank statements have eased up on looking deeply into bank statements.
Yeah, just I would like to touch base a bit more on that because often still customers have that mindset that, okay, I had a rough few months in the past and now I'm still spent. I think I've overspent. So I've been telling clients that, those days are gone when they were, okay, you had a coffee last week and, okay, they will factor that in, that maybe next week you will have the thing. But now... Yeah. It's more like future.
And, some banks aren't even looking at bank statements.
Yeah.
So the new legislation, the changes in the legislation allows for that, which is brilliant, hopefully for speeding up turnaround times as well. Yeah. But I guess the key thing is we still have to disclose the proposed expenses. How are you going to be spending in the future? And so... But in saying that, I think the culture, even though the laws have changed, the culture in the bank will take a little bit longer to change, I think. So I guess it'll ease up as the culture changes over the next few months.
And again, being coming from a bank background myself and getting into the broker shoes, I think it was a big shift being a banker because you don't want to fail your audits and you just want to go one step. Next level account. I just want to make sure I'm not missing any expenses. But again, things have eased up.
It's eased up. The laws are eased up, but you're right, and that's why it changes. It takes a little while for the psyche to change.
Yeah.
Even though the rules allow for a lot more. I think though the cool thing is like the interest rates, right? When they touch 5%, low fives, it makes owning an investment property a lot nicer.
Plus, I think with the cash flow from your pocket may just break even around that figure.
It's getting close to it. So if you look outside of Auckland in terms of investment properties, it is possible to get a gross yield of like 6% in average areas. Now, in saying that, when the interest with the interest rates of 5%, if you don't include maintenance, then rates and insurance and it's almost break even on an interest-only basis. In Auckland, if you're looking at real rental areas for investors, your return is probably more like 4.5% yield.
Yep.
So you're still chipping in a little bit from your pocket every week, and maybe that's a couple $100, depending on the situation. So there's still a little bit of an output.
Yep.
If you've had your mortgage for quite a while, let's say you've only got 15 years left, sometimes we can reshuffle the debt around in terms of extending the term of the home.
Yeah.
And sometimes, and in that sense, sometimes, we can almost be like, okay, you're not putting any more money in.
Yeah.
You're paying more interest on your home loan now because it's extended, but at the same time now you own another asset which could appreciate during that time quite a bit more than the increase in interest. So, there's things we can do to make the cash flow light and still get you looking at retirement. Obviously, you need financial advice to look at your own situation. This is very general advice, but
yeah, and then just give us a call in case if you have any questions, or maybe you're not ready yet and you want to know where you set the difference, how going to your own bank or to a mortgage broker is simple. Being a mortgage advisor, we're not limited to only one bank. So we look your options.
We do,
wide.
and my main role is still a mortgage advisor, like yourself, Dev.
And congratulations on newly elected Director of New Zealand
Financial Advice.
Yes.
Yep, I'm one of the directors now, and that is just really, I've been doing a bit of work in there already, so I'm still going to have most of my time for my clients in this business, just so we know, we're clear on that.
Of course. All right.
But yeah, looking forward to a busy summer. So give us a call if you have to, or call your financial advisor.